Coming to this question on dishonor of bill. The question says that P sold to Q goods worth rupees 20,000 on 1st January 2007 and drew a bill for the same for 4 months. So in this case, P is selling goods. That means P has to receive the payment. Hence P is the drawer. And the bill is drawn for 4 months. On due date, the bill was dishonored. That is, on due date, Q, who is the drawee, refused to make the payment. Now we are required to give journal entries in the books of P. That means we are required to give journal entries in the books of drawer only. In the following cases. The first case is bill is retained by P. That means P held on to this bill till the date of maturity. So on first date, that is 1st January 2007, goods were sold to Q. Entry would be Q debited to sales. That is, being goods sold, and the amount is 20,000. Now students, this entry records the effect of sale. On the very same date, the bill is received. That means bill receivable account debited to Q, being bill received from Q. Amount would be 20,000. Again, just to recall the fact that bill receivable and Q both are personal accounts. So the rules of personal account have been implemented here. That is, debit the receiver and credit the giver. Now students, this bill was for 4 months. That means it should mature on 1st May 2007. But according to law, 3 days of grace period would be added. That means it would mature on 4th May 2007. That is 4/5/2007. Now on this date, the bill was dishonored. That is, Mr. Q refused to make the payment. So again, this entry would be reversed. That is, bill receivable would be cancelled and the amount payable by Q would be restored back to his account. So entry would be Q debited to bills receivable, being bill dishonored, and the amount would be 20,000. Now students, coming to case 2, that is, the bill was discounted by P, let us assume for rupees 19,000. Coming to case 2. Case 2 says that the bill was discounted by P, and obviously it is apparent from the question that later on it was dishonored. So students, the first entry in this case would be on 1st January 2007 when goods were sold by P to Q. Entry in this case would be Q debited to sales. That is, being goods sold, and the amount would be 20,000. Then the second entry would be that the bill was drawn for 4 months. So the same date, that is 1st January 2007, a bill was drawn. Since P is the drawer, so it is a bills receivable for him. Entry would be bills receivable debited to Q, being bill received. That is 20,000. Now students, these two entries are same as in the previous case. But in this case, it further goes on to say that the bill was discounted by P and later on it was dishonored. So what would be the entry for discounting? Let us see. Since P has got this bill discounted from bank, that means he has actually transferred the title of the bill to bank and he has got an encashment of rupees 19,000 as is mentioned here. So what would the entry for discounting? The entry for discounting would be on the same date, that is 1st January 2007, bank account debited, discount account debited, to bills receivable. We have received 19,000, bill receivable was worth rupees 20,000 and discount would be for 1,000. And the narration in this case would be being bill discounted. Now, further the question says that after 4 months this bill was dishonored. So let us find the date of maturity. We will add 4 months here and as the rule says 3 days of grace. So the date would be 4th of May 2007. On this date, this bill was dishonored. So the entry would be that P would have to pay to bank and the liability of Q would be reinstated. That is Q debited to bills to bank. Amount would be full 20,000. Narration in this case would be being bill discounted, dishonored. Right, students? So this entry makes it clear that P will now pay bank. So he has credited bank and he will collect this 20,000 rupees from Q. So the entry is Q to bank. Now case 3 says that the bill was endorsed to A. Again, as in the previous cases, the first 2 entries would be same. So on 1st January 2007, P sold goods to Q, entry would be Q to sales. Again, being goods sold and amount would be 20,000. On the very same date, that is on 1st January 2007, a bill was drawn. So BR here represents bills receivable. Bills receivable to Q, that is being bill received and the amount is 20,000. Now these 2 entries are same. It further goes on to say that this bill was endorsed by P to A. So the next entry that should follow logically is the one of endorsement. Let us see what that entry would be. In this case, P is the drawer and since it has been transferred to A, therefore A would be the endorsee. Remember, A is a person, hence the rules for personal accounts would apply here. Now, on 1st January 2007, since this bill was endorsed to A, entry would be A debited to bills receivable, being bill endorsed and full amount of 20,000, that was the value of the bill, would be recorded here. Then later on it goes on to say that the bill was dishonored. So on due date, the due date is 4th of May 2007. That is by adding 4 months here and 3 days of grace. Now since this bill has been dishonored, that means P will have to pay A and will actually go and collect this amount from Q. So entry would be Q debited to A. Being bill endorsed, now dishonored. Now dishonored. Amount would be 20,000. So this is how the entries for dishonor would be recorded in these cases. Remember, in case noting charges are given, then they would have to be recorded separately, either in cash or just as noting charges.